Well, if you've seen lots of posts about GameStop on social media lately, it probably has to do with the stock market.
Yeah, GameStop's stock rose from under $20 to as high as $500. Wow, right? Well, PJ Green spoke with some local economic experts about it all, and he joins us now. So, PJ, they say it was fueled by Reddit users.
That's exactly right, Daryl. Now, what started as an idea on a small social media app has turned Wall Street upside down and resulted in billions of dollars gained and lost.
Working in the stock market can be a lucrative career, but it also means taking a lot of risk. And one of those risks is short selling stocks, a habit that many stock market investors use.
In this case, what they would do is they would go borrow the stock from somebody who has a stock, and then they would sell that stock that they borrowed, hoping that the price would go down, and later on they would buy the stock and hand it back to the person.
Hedge fund managers also use this strategy specifically with stocks of GameStop, the highly popular video game retailer that had very low stock prices. Some Reddit users that are fond of GameStop caught wind of this and decided to buy shares of GameStop to drive up the price. And they succeeded, with prices of GameStop soaring from $15 to as high as almost $500.
It kind of took on a life of its own of, hey, look at what we're doing. This is actually damaging Wall Street, and these huge hedge funds are losing money. So it kind of has turned into a let's punish the big investors.
It's the same thing that the big boys have been doing all along with their power and their money and their connections and such. It's just that all of a sudden a bunch of, gamers on a platform that many people have never heard of before got together and said, enough is enough.
Hedge funds are designed to protect investments while attempting to generate higher returns. But some of these hedge funds have lost billions of dollars because of GameStop's rise, and the retail investors who made the stock rise may have taught Wall Street a lesson.
They've approached this more as from the perspective of gambling and not from this traditional financial analysis perspective. And so that's why they were successful in this time.
And for those thinking of shorting stocks or buying shares of GameStop, personal money planning owner Gary Silverman says,
don't do it. Because even the people who know what they're doing, these hedge funds, look, they lost billions and some are going to go out of business.
Now, GameStop stock opened today at $316 and closed today at 4 p.m. Eastern at around $225.
All right, already going down from that 500 that it went all the way up to.
Right,
That's pretty
yes.
crazy. Okay, thank you so much,
And
PJ.
interesting, yeah.
Yeah, absolutely.